Well, Vikas Khemani is now joining us, founder of Carnelian Asset Management. Vikas, good afternoon. Great to have you with us here on the program. Thanks very much. Happy New Year. I think we are speaking for the first time in the new one. And it's been a great year. So I can't say so far this year, but it was a great 2023 against all odds, against all expectations. And in a similar kind of fashion, we started the cusp of another year where again, there are all these sort of events thrown in, right? There's elections and there's what will happen to interest rates, what will happen to the US, etc., etc. In that last letter of yours, which you sort of send out to your investors, you kind of outline month by month all the events that 2023 was marked by, and it kind of put things into perspective that markets kind of moved on and looked ahead. How are things looking to you? I mean, markets near and medium term as you look into 24, Vikas.
Good to be chatting with you. I think of course, when you are coming out from a backdrop of a year like 2023, which delivered exceptionally good return, I mean, expectation from 24 should be low. Having said that, I mean, I continue to believe that 24 will be also a positive year, good year. May not be the same year as 23. Because I think every market goes through a sort of phases, but I think directionally India looks very good. Two major factors determine the returns of the markets, earnings and liquidity. And if you look at both these factors, they are well placed. Earnings, if you see across the board, whether it is banking, automobiles, IT, where there was skepticism, I think today probably that would have gone away, capital goods, manufacturing. So, across the board, except maybe to some extent you can call it consumer, which is tapered. But otherwise, broadly, there's a broad-based earning growth which is happening. Most pessimistic guy would say 15%, optimistic guy would say 18%. So you have that kind of range, which is unheard. I mean, there's no other market which offers that kind of. So earning is very, very sorted. It's coming to the liquidity. If you see, I mean, liquidity is very, very strong. As we know, domestic liquidity continues to remain strong. But more importantly, I do believe 24 will see a very, very large liquidity coming from foreigners because it is always linked to the interest rate cycle of the US. So as US interest rates were going up, we saw that money going out, and now we already know that there is a case for 2 or 3 rate cuts in 24. So as that comes down, we will see massive amount of liquidity coming into the market. So I don't see a reason why, and also probably by and large, I think the political uncertainty seems to be behind. So if that continue to remains, I see no reason why India will deliver will not deliver good returns. Now it may not be as good as 23, but definitely it'll be a good year. And India is one of the best story in the world in making, and that will continue to remain. Of course, we need to be cautious on some of the frothy pockets, small and mid cap, where there is froth and excessive getting built. You need to be cautious. But I think 2024 probably will be from large caps, and then those kind of rotation might happen.
All right, Vikas, just hold on to that thought. Nimesh just told us about a potential large trade taking place on Gillette. And we have close to around 6 lakh shares that just got traded as well. So I think Gillette is one stock. Nimesh just alerted us that Street is bracing for a large trade out there. Just pull up today's chart. There's a large trade that's taken place. So just wanted to highlight that for our viewers as well. Yeah, that's the one. 2% out there. Maybe Nimesh will come back with a quick update on that front as well.
Okay, all right. That is Gillette immediately looking at that block trade that happened. And Nimesh getting it right ahead of the event. Vikas, hi, good afternoon, and good to have you on the show. So, you sound very, very optimistic, and I'm sure for good reason. The only issue is, like you mentioned, there are certain pockets of the market, but maybe there's some froth building up. So just help us identify the areas that you will either avoid or trades where you think it's time to take profits. I'll give you a small example of, the sentiment that we're dealing with. Now, a lot of the smaller jewelers and some of the very recent listings, these stocks have rallied between 30-40% in a matter of a week. So perhaps, that's where you get a sense of some exuberance or maybe over-exuberance coming in. Your thoughts?
I think this is what happens in the bull market, that when a particular company in a segment does well, a lot of people, the naive investors start relating to every other company, smaller company in that, and start saying that same will get the same valuation and growth. And that is where the bubbles and the excesses get built. And as we know that when the times plays out, you know who was swimming naked, and those smaller players don't sustain, and you lose a lot of capital. So idea is to remain very, very sane, conscious of what value you are paying, what kind of management you are betting on. And I can tell you today, there are lots and lots of players. Still, you can find value investable places, but changing momentum, changing companies which are not so high quality is a very big source of risk. It is happening in the small and medium SME segment. It is happening in many small caps. It's happening in sectors like, where there's a lot of euphoria in sectors like defense, railways. So one has to be very careful. I mean, we have all seen that whenever there's a euphoria, whether it was a new tech in 2022, all this dies out, and when the sentiments are down, then what the reality is, right? So I think whatever does not lead to common sense, one should stay away. I don't think acting out of FOMO makes any sense. And that is what is happening in some of those euphoric spaces. So best to be avoided.
Okay, Vikas, just trying to extrapolate what you said. If you want valuations, you want good quality names, no use looking for the next Titan or the next HDFC Bank. Maybe some of these stocks, particularly the private sector banks, they've actually underperformed in the last 3 years. Will that be a space that you're more comfortable with?
Again, so many of these franchises will do well. There will be short-term cycles of underperformance. Outperformance will continue. I think it doesn't happen like we've been owning ICICI Bank for 4 years, and it has for us it's been 3.5 to 4x. And I see no reason why this stock will not deliver 15 to 20% return for next 5-7 years, right? But within that, there will be intermittent cycles. Last year, we saw a very big case for PSU sector banks getting re-rated. And as a result of that, we kind of created a position. And I think probably if you look at 1 to 2 year perspective, I think some of the mid-tier PSU banks could outperform some of these names which you mentioned. So I think those kind of things are there. One can have tactical play, but if I look at zoom out and take 3 to 5 year view, I think leading private sector banks like ICICI Bank will do very well, and some of the PSU sector banks also will do very well.
Vikas, your words that you told us on 1st of January in Trading Hour was that this is going to be a big year for IT, 2024. And it's literally started off like that. It's caught everyone's imagination. The stocks are on fire. Tell us about, the thought process behind IT from here on and why you think it's going to be a big year in case someone missed that conversation.
Look, I think we have had a very contrary view on IT. I think whole of last year there was a narrative that IT is not going to do well. There's a recession in US, and I think most of IT top throughout last year performed very well. And I think I always said that IT is a great play on interest rates coming down in US. Please understand that every company in US and developed market is looking to reduce cost. So far, whatever order wins most of our companies had, they were basic minimum survival orders. The transformation, development, growth orders will come only when the environment improves, when the interest rate starts coming down. Secondly, a lot of companies won the orders, but the execution is going to start with a lag. And that is what is beginning to happen. So you saw a time when there was a lot of order winning happened, but execution didn't happen, hence growth did not come. And now you are going to see in next 3, 4, 5 quarters, growth picking up. So from both execution as well as the new order side. So according to us, IT is a great play, and not only for this year. I think it's going to remain like this. NASSCOM first, after long, upgraded the guidance for the growth. I mean, they're saying by 2030 we will have $500 billion of IT exports. Which is like a great, if you ask me, guidance. Right? So if you look at that, there are a lot of underlying play which can drive the IT sector as well. And in this cycle, according to me, many companies will become mid to small, mid companies will become large. Like in 2009 to 14 cycle, HCL Tech, LTTS, LTI got created. Many companies will get created in this cycle.
All right. I certainly hope so. Vikas, congratulations on that call on IT. Thanks very much for joining us. And it's a pleasure having you with us here on CNBC-TV18. Speak with you soon again. Thanks indeed. That's Vikas.